Crypto Hotep here with another investing video. We are on week 92 of the Family Portfolio and Dividends Tracker. I really appreciate the time and thank you guys for tuning in as always. Um, if this is your first time watching the video, go to my channel, go to week number 1, and that's where I go through my whole methodology, why I'm doing these videos and these updates each week. And basically, you're following the investment journey with me and my family and showcasing that you can build wealth over time, even through small incremental deposits. And basically, I gave my family a short list of stocks to choose from. They chose their own stocks, and then we proceeded to use M1 Finance as our broker of choice. And you'll see that shortly here. But by no means is this financial advice. Please do your own due diligence with stocks, crypto, metals, anything you're investing in. Before we jump in here, we're going to do a weekly review here, and we want to go through, and this is one of the main reasons why I do these videos is because we want to not only journal and kind of follow the journey of the investment process, but also talk about things outside of the investing, and some of that relates to news because the news can also dictate how you feel about the markets as well. So let's go through a brief weekly review. I'm using Grok here just to give me a quick synopsis on the week, in terms of news events. So the big thing here was in terms of market performance. S&P 500 actually did hit an all-time high at 7,000 this week, which has never happened before. So the markets did pretty good. It was very volatile. It was a very volatile market this week. And the reason is because there were a lot of high impact events that went on. To start the week, I believe this was on Sunday, Fed Chair Jerome Powell recorded a video showing that the DOJ did issue subpoenas to investigate the Fed as well as Jerome Powell on interest rates, renovation costs, those type of things. Very out of the norm, a very big surprise. Nobody was expecting that. So again, that's how we started off the week. Trump, in terms of some of his policies, he spoke on capping credit card interest rates at 10%. So what you'll see is most of the credit card stocks dipped below here. Why did they dip below? Well, more than half the time, credit card companies get paid off of the interest, off the astronomical interest rates, those 29, 30, 31% interest rates that they charge on credit cards. So with Trump's saying the things around, or proposing, I should say, the 10% cap, that had a negative effect on those stocks like Visa, MasterCard, Amex, and such. Okay. Some geopolitical easing. So there were tensions in Iran. Per Trump, he called off those attacks on Iran, and that also reduced some of the oil disruption as well. And then there were some energy stock aftermath just with Venezuela and oil and those type of things. Okay. Another big thing was CPI. So the inflation. This was inflation week this week, and CPI came right at 2.7%, which is what it was forecasted at. So it was kind of like a nothing burger, if we're being honest here. So that encompassing in the fact that we have earnings season that's kicking off. Banks kicked off earnings season this week. So, we got the PMCs, Goldman Sachs, JP Morgan, they kicked off, and they actually had pretty good earnings here. Jobless claims fell to 198. Okay. So again, when we talk about jobless claims, right, there weren't really any surprises with the jobless claims, but we want those jobless claims to be reduced because that would signify a stronger economy. And then also we talked about CPI as well as PPI, and other releases were assessed without major surprises, meaning that the numbers came out forecasted at what they were forecasted as, So it was kind of like a nothing burger. Okay. So all in all, decent enough week. It was a lot of ups, lot of downs. It kind of evened out towards the end of it. Now, before we go to week 92, let's go to our week 91 here. So week 91 saw us with a balance of $3,886.30. Money weighted rate of return year to date of 2.04%. We didn't have any dividends yet, okay? But we did have a market gain of $77.82. Now let's see what's going on this week, okay? So this week, week 92, we have a balance of $3,953.33, money weighted rate of return of 2.62%, dividends earned finally of 87 cents. Hey, big money here. And then market gain of $99.09. So let's see what's going on and what happened between last week and this week. Between last week and this week, we'll start here at the 15th because that's the most um that's the that's that's the date before everything in the prior week, I should say. We had a dividend payout from Old Realty Company, and Old Realty Company paid us out 67 cents and then 6 cents right here. So Old Realty Company is in my portfolio, quote unquote dad stocks. This is under my real estate sector, if you will. And again, if you follow the channel, if you follow these updates, I'm just stick with O because of the income. And this is one of the prime reasons is because of the income here. Now, I know it's only 67 cents. However, it's more of getting these dividends over time and building them up like a snowball effect, and thus increasing my holdings with O as well. This was a deposit week as well, so we deposited our regular amount here, which was $20. We did have a couple buys here, so we bought some Apple, some AbbVie, Microsoft, Tesla, and Sony. So we had some pretty good buys here. And then we were blessed with another deposit as well. So normally, again, this is your first time watching the video, normally we'll do a regular deposit of around $20 every 2 weeks. But if we are blessed with a bonus or maybe a bonus payout, something along those lines that will create some more income from us or for us, I should say, then we will deposit some more or some extra money as well. So we did deposit a little bit more here at $25, and we bought a little bit more of Apple, Amazon now, Visa, Microsoft, some more Sony, and then Tesla. Okay, so let's see how these portfolios look. Let's go from bottom to top as always. At the bottom is our middle, but that's only because of the balance. Because if you look, our middle has the highest year-to-date percentage rate of return out of anybody. Right now, it's 6.61%. That's not a typo. And that may not seem like a lot if this is your first time watching a video and you're kind of scoffing at that rate of return. Remember, this is year to date, and we're only in the first month of the year. So, and we're already at 6.61%. That's phenomenal. So we're at 6.61% money weighted rate of return, balance of $552.05, market gain of $33.68, and then no dividends earned as of yet. Target is turning around, as I mentioned several weeks ago. I said watch out for Target in our middles portfolio. Target looks really, really good. It looks like it has bottomed out, and it looks like it's steadily reversing, and it looks like it has a good chance to do a major reversal as well. We're up 13% on Target year to date. Costco was down in fourth quarter into December and early January, and then look at this. Money weighted rate of return year to date over 11.5% on Costco. Again, Costco will always Costco at the end of the day. Amazon up over 3.5%. Google up over 5.25%. Starbucks up over a staggering 10%. And then Sony's down, but we said that. We said Sony's going to take a break. It's been up. It was the best performer last year. It's going to take a break, but we're fine here. And then Tesla. Tesla is also down over 2.5%. Overall, this is one of the best performing portfolios currently that we have in the family portfolio. Love to see that. Okay, let's go to our youngest. Our youngest has a balance of $557 on the nose too. Look at that. Money weighted rate of return of 1.44%, market gain of $7.80, and no dividends either. So Costco, very similar, 11.76% up. Love to see that. Starbucks, very similar to our middle, 10.43%, but Tesla's down over 2.5%, Sony's down over 6%, and then Apple's down over 6%. We talked on Apple too. Apple, I believe, it's topping out right now towards the end of January, which I said before. I think it's going to take a break, and then it's going to come down. You're going to see FUD headlines disparaging Apple, and then saying Apple's done, they don't know what they're doing, all of this other stuff, and it's going to find a bottom just like last year, and then it's going to quickly reverse up. It's like rinse and repeat. But while it's doing that and while it's dipping, we will buy Apple all day. Let's go to my wife's stocks. My wife has a balance of $594.93, almost at $600. Money weighted rate of return of a very impressive 4.43%. No dividends yet. Market gain of $24.88. So Google's up over 5%. Pepsi's up over 2%. And then Celsius. Celsius is going for round two here, up over 18, almost 19%. Tesla, though, very similar, down over 2.5%. And then Microsoft, we're steadily building that position with Microsoft, but we're down over 4.5% with Microsoft. And that's fine. That's fine. We can buy discounted Microsoft all day. Let's go to our oldest. Our oldest still has a balance of over 1,000 at $1,101.92. Money weighted rate of return of a positive 0.63%. Dividends earned, nothing. No dividends as of yet. Market gain of $6.90. Apple, we talked about this, down over 6%. But Costco making up for it, up over 11.74%. McDonald's, 0.61% positive. But Tesla, down over 2.5%. Not really worried about the oldest portfolio. I know comparatively speaking, the money weighted rate of return year to date, the percentage is low, but again, that's how that portfolio acts, right? And reacts. So we saw it last year. You can watch those old videos if you want and look at that, but this is nothing new for us with our oldest. That's just how the portfolio rolls. Last but not least, let's look at mine. So mine year-to-date balance is $1,147.43. Money weighted rate of return of 2.4%. Market gain of $25.83. Dividends earned of $0, or I shouldn't say $0, but 87 cents. That was that old Realty payment we just saw. So all in all, technology is moving here. We're up over 1% on technology. But I really focused on buying the dip. So, we spoke about our buys this week, and one of them was Visa. So I did buy more Visa here, primarily because between Moody's and Visa's at a relatively cheap discount right here. So I'll always scoop up Visa all day. And I think that headline with Trump and the whole credit card 10% cap, that was a perfect buying opportunity for Visa, for MasterCard if you invest in that, for Amex if you invest in that. It provides a little discount that you can just add to. So I did take advantage of that. And then we did take advantage of AbbVie. So we did buy some AbbVie, and the reason I did was because that was down as well. AbbVie's going to take a little break here. I'll buy the dip on AbbVie all day. It is a compounder and a dividend payer, so I will do that all day long. O hit a 52-week all-time high today, so O is really punching the number in terms of appreciation and still generating that income in terms of dividends. I'm just going to keep it. I'm not doing anything with O, and I'm just going to compound those dividends as best as I can. Consumer and staples, this is Costco and Lowe's. These were both in the green year to date. One's up over 11%, one's up over 15%. These were both down towards fourth quarter. So again, these are quality companies though. Again, you got to look for those value type of companies now. Those value companies are really going to be the headliners, I think, of the stock market, if you want my opinion. So watch out, like we mentioned, the Targets, the Lowe's, the Costco's. You got to watch out for those ones that have been around for a while, especially those dividend payers too, because normally those are the boring ones. People don't pay attention to them until they actually start making noise. So restaurants and food, we are down. Coca-Cola is up just a little bit, and then Domino's Pizza is still down over 4% on Domino's Pizza. Almost 4%, I should say. But all in all, I'm very pleased with my portfolio. Up over 2.25% year to date. Can't be mad at that. And as I mentioned, I think with these videos, you have to understand something. Like with the type of investing that we're doing, it's more of a marathon. As we mentioned before, it's not a sprint. Don't expect to get rich overnight because of something you saw on TikTok, something you saw on Twitter or X, whatever you want to call it, just because that's not reality, right? So when we talk about building wealth, we're not talking about getting rich quick. Building wealth takes time, and sometimes it doesn't feel as though those little small deposits are adding up. But as you can see, and we'll look at this chart really quickly here. As you can see here, this time last year, we were at around $1,700 on January 16th, 2025. Fast forward, we're almost at $4,000 1 year later. And again, our money weighted rate of return is up over 20%. But I think the biggest thing is we're not really dumping a lot of money into this. We're doing very small incremental deposits. We're not overextending ourselves at all. And we did start out at humble beginnings. We started with a little bit over $100 in this account almost 2 years ago now, and we've grown it steadily. And again, you don't need a whole bunch of money, especially now with technology. Anybody can invest. They can open up a taxable brokerage account and invest, because if you didn't know, just saving your money or putting your money under a mattress is not doing anything for you, and it won't do anything for you. You need to invest your money. And if you don't feel like picking stocks, you can just pick very safe index funds or ETFs, my personal favorite. So maybe I should make a video on that too, just, for the passive investor or the investor that just wants it on cruise control. Well, it seems like a good idea. But, I'm rambling on here, guys. But as always, if this video is helpful, feel free to like, subscribe, comment, let me know what you're investing in. Share the video, help the algorithm, help us out, support the channel, guys. And that is it for week 92. And as always, thank you guys. Happy investing.